JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 4th of January 2023. So yeah, welcome everyone. Welcome to this first Wednesday of this year. Yep, I'm gonna go on for this remaining week like that. But yeah, guys, welcome to this first Wednesday of this year. As always, we're gonna have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest, and we can continue. Okay, so now then, also just before we jump into the charts, as always, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our jfdbrokers.com website, which you can always check out for more information about us, guys. So now then, let's jump into the charts, guys. The first one I want to pick up here is Nikkei 225, and there we go. We opened up and we have fallen. Below the lower side of this triangle pattern. And what's next? Basically, yeah, further declines are possible here as long as we stay below this lower side of the triangle. The only issue that I have here with my little theory here is the fact that we are approaching this key support zone right here. So basically, we could see a little hold up, maybe a little rebound back to this upside line, which is also the lower side of the triangle. We could maybe test it from underneath and then go back down. So in other words, something like this, which I'm considering. But like I said, initially I am keeping a close eye on this key support zone between the 25,520 and the 25,622 levels right here, marked by the lowest points of June and September respectively. So now in terms of, let's say, further in terms of the upside, actually, well, a push back above this lower side of the triangle which we broke, a push back above it, back inside the triangle, then yes, this could allow maybe a few buyers to go back into the game here and maybe drive this index to the upside. However, let's be very cautious, careful, guys, and for now, yes, I'm leaning a little bit more towards the downside, but given that we are approaching now this key support zone between these two levels, yep, I will remain cautious. Maybe we could get a little rebound or something, and then move further south. If we do clear this area straight away, well, guys, it opens up the path towards the 24,681 level. Now, the Shanghai Composite, very quickly on that one. This one's the opposite, actually. This one's doing quite good. And look, I mean, I talked about this last week, and I mentioned already this week. So I think, look, we broke the downside line, and this is what I was saying, that if we pop above the 3,100 level, I'll go higher. Well, so far we're going higher, we're moving to the upside nicely, yep, but what I said as well, that hey, we do have a possible head and shoulders pattern building up here, and this could be the case. This could be a nice idea to watch, to consider. However, look, at this point, let's go slowly on this. At this point, the fact that we broke the downside line is great. It looks a little bit more bullish. We broke that 3,100 level, the 21-day EMA. So we're now gonna still, stick to the upside. However, I am gonna be very careful around this 100-day EMA together with the 3,145 level. If we hold here, then yes, we could consider that head and shoulders idea. However, if we start breaking it, then maybe I will ignore the head and shoulders pattern, and I'm going to aim for that 200-day EMA. Simple as that. The German index, DAX, this is quite interesting. Why? Because basically we got that pop above my 14,200 level. I spoke about that area yesterday, and I said that in order for me to go higher, I need that a good move above that 14,200 level. Well, we kind of got it initially, but then we sold off. However, I'm looking at the cash index right now, and I'm seeing that the index is trading around slightly above this hurdle, and which means that, well, there is hope. There is still hope for the bulls to step in here and potentially drive this one higher. So let's keep it short and simple. Basically, if we do stay above the 14,200 level, then yes, I will aim a little bit more towards the upside. If we fall back down here, I will take a bit of a neutral stand. Now, one thing that I wanted to show you as well to support the, let's say, the downside scenario idea. Now, what do we have here? So we previously had a nice little range. We broke to the downside quite significantly. We drifted lower, and we are now retracing. If you've seen lately, you can see all these days we have been retracing overall to the upside, and forming something of a channel, roughly guys, something of a channel here. Yep, could be an interesting one. Look, I would say this way: if you're, oops, sorry, the wrong line here. There we go. I just wanted to grab the arrow. Look, what's happening here, for example, if it's going to somehow continue to respect the rising channel, then, well, basically, I would say there is potential for some downside. Why? Because, let's put it this way, there is a drop, there is a little correction, and then a further continuation drop could happen again. Now, of course, something needs to trigger the market first for that, of course, the news, the headlines, the economic calendar, that's what we're going to be watching today, tomorrow, and yeah, on Friday. So, for example, today we do have a few pieces of data coming out from Europe, especially. We have the services PMI numbers from the Eurozone. From UK, we have some data as well. Also, we have the ISM manufacturing numbers from the US, which could trigger, of course, a bigger move in the US indices, which could have its, of course, effect on the DAX as well, after hours. And then we could, see this one maybe go in a different direction. Either way, anyway, long story short, guys, talking too much about the same thing, me. Look, it's for now I'm gonna aim higher. However, I'm gonna be very cautious near the upper side of this rising channel. If we get a break through it, yes, I'll continue targeting this this upper side of the previous range where we were before. But if we somehow respect the upper side of this rising channel, guys, well, maybe there could be a potential for a move lower. But again, let's not rush into this idea yet. First, let's go slowly on this. As long as it stays above the 14,200 level, I'm going to continue aiming a little bit higher. The S&P 500, guys, very quickly on this one. So, yesterday, we kind of ended up in the negative territory today, yes. Oh, sorry, yesterday. Look, in general, it's still holding on. It's still stuck here. It's still, waiting for some sort of a catalyst. And to be honest, I think that, well, maybe, today's numbers and the FOMC meeting minutes could be a trigger. Also, we are, going into NFPs as well. So that's going to be something that that the market will watch. And at the moment, we're stuck here. So we had a nice push higher yesterday, but it did kind of eventually, loosen up here a little bit, and it fell down. Now, the cash index, by the way, right now is sitting at around 3,830, so basically above yesterday's close. However, I am still cautiously bearish on this one. Just from the technical perspective, look, I mean, the fundamentals could change it very quickly, of course, as well. But for now, I mean, look, if I talked about this idea, I said that if it goes a little bit higher, if it gets a hold up somewhere around here, another decline here could be possible. Well, so far it's working out. If you're a bull, I'm sorry, guys. I mean, this is what I see right now on this on the charts. And in general, if you hear the chatting on the everywhere on the financial the other financial channels and stuff like that, you hear that everybody's kind of predicting a bad year. Look, there is an element of the doubt here. I mean, we had the if you remember the 2020 March decline here, so everybody was already like skeptical, but look how well we rallied from here. So maybe another rally here could be possible at some point, but I would say let's wait and see. Let's wait and see. Let's just go slowly, step by step. I'm at this point, to be honest, I am neither a bull nor a bear on this one. What I'm going to do here, I'm going to try to take my short-term moves here. I try to predict my short-term moves and I'll try to get my little profits if I can, of course. I'm not going to try to, let's say, invest into all this. I mean, you can invest into stocks if you wish. I mean, some of them are like quite cheap right now, but don't expect those maybe to, to kind of explode significantly, unless it's a small little interesting stock which nobody heard of before, and it suddenly picks up demand. But hey, there are those. So let's see, of course. Anyway, long story short, guys, at this point, like I said, I'm kind of cautiously bearish on this one. Let's see if that's going to happen or not. But as long as it stays below this highlighted territory, below this 3,900 zone, somewhere around here, if it stays below it, I'll continue aiming lower. DJI, Dow Jones Industrial Average, guys, or sure, it should be DJIA, but anyway, Dow Jones Industrial Average. Look, we are having an interesting moment here. I would say it's very interesting because why? Because we're flat. We're kind of really struggling right now to figure out where which direction it will take, but for us it's actually good because then it creates this opportunity for a pop here for the upside. For example, the 33,419, that's what I'm looking at. If we pop through it, then great, I'll go higher. If we drop and we pierce through this 32,573, something like that. In general, if we because then we would fall below all of the EMAs, and this could create more bearishness and more sellers could join in. So keep that in mind. The cash index right now is sitting at around 33,170, basically slightly above where it closed yesterday, but still below that 21-day EMA and below our breakout point here. That's what I need in order to go higher here. And for the downside, I said that I need to see a drop below this hurdle, below this area, in order to go lower. DXY, look at this, guys. DXY, I talked about the DXY yesterday, and I said that, hey, don't rush, because look, of course, it was looking quite bearish. This 100 103.45 level is or what is still actually something to watch for, and I said that I need that confirmation break. We didn't get that, and what we got instead, a break through the upper side of the falling channel. And this is what I was saying in these scenarios, whenever we have a strong move to the downside, and then a kind of a gradual move to the downside within the channel, or even better, a falling wedge. Yep, we can expect some movement to the upside. Now, am I saying that this is going to be like a strong move to the higher? No. But initially, what I'm targeting here is that excuse me, if we do pop above the 104.55 territory right here again, then we would also push above the 21-day EMA. Then I'll aim for the 200-day EMA and then 100-day EMA. Now, some of you probably can say, hey, like, you know, we have crossed the 21-day EMA, has crossed already the 100-day EMA, the 200-day EMA. So overall, it's looking bearish. Yes, you are not wrong here, but from the shorter term perspective, there is a bit of a move here. There could be a move here to the upside, kind of the last chance maybe for the bears to step in, and then, you know, we could maybe sell off later on. Because look, we had a good run here on DXY. If I draw my favorite Fibonacci's right here, just bear with me one moment. There we go, from this low up until this high. And yeah, what we're going to see here, we did retrace 38.2. We kind of move lower. We found the midpoint between the 38.2 and the 50. So in a way, I would say, look, there is still room here for the upside. Maybe actually it could travel towards the 200-day EMA, stop here, and then, you know, go lower. And this is where I'm going to aim for the 50 here, 50% retracement in the Fibonacci, which is roughly around that 102 zone. Slightly below that, we do have the 101.30, which could be another good option. But again, initially the 102 could be that good area to watch, because hey, fantastic move in general since what? Since January 2021. For 2 years, look at this. For 2 years, we have been moving nicely to the upside, but only started reversing in September quite significantly. And I would say, look, at this point, I will consider a move higher, but a careful one. Look, initially, I'll aim for the 200-day EMA. If we clear that one, I'll go for the 100-day EMA, and so on and so on. But if we start seeing some sort of a hold up here, I mean, no, do not exclude the downside scenario. So jumping into gold here, guys, very quickly. Oh, by the way, I can see Evu. Yep, Evu. Good morning to you too. Good morning to everybody else as well who's joining in. So happy New Year to everybody who's joining in right now, who has not joined in yesterday. So yeah, happy New Year to everybody. I hope you all had a fantastic time. But yeah, guys, gold. Gold is doing fantastic move here. Look, I talked about this idea as a rising channel, and this is one of those moments which kind of works the opposite. So we have a strong move to the upside, then we have a gradual move to the upside here, and now it's like a, you know, now it's breaking higher, it's breaking to the upside. Look, at this point in time, I said yesterday, for example, as long as we stay above this 1833 territory, I will continue aiming to the upside. And so far, we are doing a good job here, and we are pushing to the upside. Yesterday, we had a decline here where the commodity went back below this 1833 zone at one point, but then the bull stepped in and started pushing it back up here. And look at this, we're now at 1851, and we're clearing this upper side of the rising channel. I think that it's time for me to get rid of this rising channel, because look, in general, it worked out nicely. Why? Because what I was saying previously, I said that before, that if we continue to trade above this 1797 territory, somewhere around here, then yes, I'll aim for the upper side of the rising channel. Of course, at that point, I had a bit of a different channel drawn, but hey, that's still okay. You always have to redraw these things, guys. Unfortunately, you know, it changes very quickly, so yeah, you have to kind of approach it, you know, all the time with a fresh head. Now, one thing that I want to get rid of is this rising channel. No longer needed. It has done its job. So thank you very much. Let's move on. Now, what's next on this one? Of course, straight away, me being me, I do like these wedges and everything, and I'll start drawing a wedge, something like that. So could be the case. At the moment, I will keep this because this is the highest point here that I'm marking. We are near the upper side of the wedge right now. We're near this. So basically, it could be somewhere around 1855, maybe something like that. Could be a nice, good target. We're already doing a good move already the morning here in Europe. So look, this is where it's going to be very interesting. That even if we clear this one, if we clear the upper side of this wedge, well, ignore the wedge then in that case. Just go higher. 1879 could be a nice good target as a next target. So so yeah, at the moment, look, it will go. I'm slowly aiming to the upside. At the moment, I'm aiming for the upper side of this wedge, which is roughly maybe around that 1854, 55 level, something like that. Look, it's a rough estimate. If it gets a hold up somewhere around here, maybe a bit of a retracement here could be possible again. But I would say again the same thing. As long as we stay above this 1833 territory, we could still go higher, even if we do correct back to the downside. However, for the downside, guys, if we start moving below this area, below this lower side of the rising wedge, well, guess what? This could open the door towards lower levels, and we could end up aiming for the for these EMAs right here. WTI oil, guys. WTI oil, so failing to move above this barrier, instead moving lower. Now, what I said to you previously, that if we do fall below the 76.83, I will consider a move to the downside. Well, so far I am doing that. 73.36 is my next target, only if we stay below the 76.83. If we somehow start pushing back up here, basically what it means that we are just oscillating around that 21-day EMA. No interest for me here, to be honest. I don't like these scenarios, so I'm just going to leave it. But if it stays below that 76.83, well, guess what? I mean, further declines here could be possible. ETC USD, honestly, one of my favorite ones. And in general, I started looking at these. Other ones, not the most popular ones, like Litecoin, for example, ETC USD as well. I mean, those are just making some moves. I do like assets that are making some moves. And in general, what I said to you yesterday, that it seems like Litecoin is kind of behaving more like a currency rather than an asset here. Whereas like Bitcoin, Ethereum, and all those guys, they're kind of, yeah, like more of an asset thing. Whereas TTC is kind of in between there somewhere. It's not really like a currency, not really like an asset, but it's still doing something. So as you can see here, we're pushing nicely to the upside. We are climbing higher, and look, previously I talked about this idea, said that if we do fall below that 18 zone, I will go lower towards the 13.36 territory, somewhere around here. We did kind of move there, but we found support near that 14.7, something like that, and then from here we're now seeing a reversal to the upside. Now, am I saying that I'm very bullish? I would like to be bullish. However, what I want to do here, actually, I think I want to redraw a few things. Look, I'm going to try to take this, and I want to see if this is going to work out or not. Now, this is one of my theories as well, again, which I've just mentioned. Apologies for that, guys. Just bear with me one moment. Look, I've mentioned this theory already with my DXY, with my gold, and look, I think I'm gonna stick to this theory again. So we have a initial decline, a strong decline, and then we have a gradual decline. So what happens next? We kind of get a nice little where's that? We get that. Is it DXY? Yeah. So we get that little breakout then. So is ETC USD doing a similar story, a similar thing? Well, kind of is, if you take a look at it this way. So you kind of see the same thing. Doesn't look very parallel, but hey, I just dragged it, so it should be the same. So I think that this could be the case. I mean, we could see a nice maybe breakout, but hey, I'm not rushing into anything yet. I need that confirmation break, and a push back above this 18 level could do the trick for a few more buyers. It could open the door towards that 100-day EMA. If that gets cleared, my next target is the 200-day EMA here. So yeah, that's what I'm keeping an eye on for now. AUD/JPY jumping into a few pairs. Now, I would say mission accomplished in this one. What I was referring to this from last year, the last week, basically saying that, hey, if we get a hold up near this highlighted territory, I am aiming lower, at least towards the 87.30 or maybe even 87 point or 87 point period. We got the move. Okay, we didn't just fell shy by a few pips to reach that exact level, but to be honest, hey, let's not be greedy. Let's take our profits. Congratulations to everybody who managed to get this. Great. Now what's next? What's next is we're getting a nice rebound. And is just proving to me that this whole area here is something to be watched, and it's proving to be quite a nice area of support. So look, let's assume this is going to be that whole support. Again, if you're not comfortable, for example, with the 87.30, you can have a look at the 87 zone, because a nice good break below the 87 territory will confirm a forthcoming lower low, and it could open the door towards lower levels. Now, where exactly it could go here? Well, there are a bunch of options here, but to be honest, all of them could be quite interesting. For example, here, the 84.32, or actually maybe even better, the 84.60, something like that. So, look, if we do break that highlighted zone, I'll aim for this territory right here. For the upside, to be honest, a very conservative approach here. I will wait for a break of this downside line, and then I'll consider a move higher. Maybe it could come on a break of this area. Maybe it all could work out beautifully. So let's say we could, start moving sideways for a little bit. If you do like sideways trading, guys, I think this could play out nicely for you. If you position yourself accurately, correctly, and if you get a little bit of luck, then yes, I mean, this could, end up being a nice one. And then we could maybe come closer to this little area, this potential breakout point. And let me just probably circle this one, if I can circle. Oh, yeah, there we go. So we could, come to this little area here. And if it does make a move higher, great, wonderful. We could go a little bit more north. But if it holds, another decline here could be possible. But either way, guys, at this point in time right now, I will just stick to these two highlighted territories and wait for a clear breakout through one of them. AUD/USD, just a quick update. Look, very interesting activity here. We sold off yesterday, and now we're recovering sharply, and we're clearing this barrier right now. This 0.6820, 21, something like that. But either way, I was looking at the 200-day EMA. I said to you that if we do clear this and we stay above it, I'll go towards the, I can't call it, this upper upside line. I mean, it's the wrong, don't use that term. It's something that I just created. But we could go a little bit higher. Let's go for these levels. 0.69 territory, somewhere around here, and then maybe a little bit higher. So let's go slowly on this. So at this point, look, my problem is that right now, it's the beginning of the European session. We're already doing quite a significant move here higher, so I would probably leave it for today, because maybe we could see at some point a bit of a retracement, maybe back down, something like that. And we have already quite moved a lot, I would say. So look, it's interesting, but I will leave it. I will leave it until I get maybe my clear, move, and I'll see if we stay above the 200-day EMA today. Yep, this is where it could become a little bit more interesting. USD/JPY very quickly on this one. Looking at this picture here, we can see that it seems to be flirting right now with this 130.40 level. So if we clear it again, because yesterday we did that, but if we fail to stay below it, if we clear it again and we stay below it again, or sorry, not again, but we just stay below it, then yes, I will go a little bit more to the downside, towards the 126.36 level, or even lower. But hey, let's get to that level first. For the upside, pretty straightforward here. Move could be a break of this 134.50 zone might do the trick for a few more buyers. Look, if you already want to start looking at this break, if you already want to start looking at higher levels on a break of this downside line, you can. However, do accept the fact that there could be a hold up somewhere near this 134.50. If it does hold, it could drift back down. So basically, we could end up being in a range. So that's why, yeah, don't rush into it, and let's wait and see. Let's wait and see. But could present itself with a nice opportunity. However, at the moment, I am considering the downside opportunity. USD CAD very quickly on this one as well. Look at this beautiful rebound from this lower side of the range. Again, don't get me wrong, not a very attractive range. A bit of a frustration here last week, at the end of last week, but hey, it is how it is. So we got that rebound here, but still okay. Look, I mean, still kind of a range. If we clear this 1.37 territory, I'll go higher. Simple as that. If we drop below the 1.3522 territory and stay below it, I'll go lower. Simple as that. GBP NZD, this one's still within the falling channel. Look, I mean, I talked about this again. Same story. Falling down initially strongly, then gradually moving to the downside. I'll take a very simplistic approach here. If we break this downside line, I'll go higher. I'll aim for the 100-day EMA, the 200-day EMA, and if those get cleared, yep, higher levels could be met here. For the downside, I need to see a drop somewhere below this 1.8958. Yes, I will start looking at some lower levels, although the lower side of the falling channel here is very close. But nevertheless, we could get a breakout. So look, I'll start looking at the downside on a break of this 1.8958 roughly. If we clear it, then yes, I'll start looking at lower levels, but with a pinch of salt, because again, we could get a hold up near the lower side of the falling channel, but if we break it, wonderful. Further declines here towards this key support zone near the 1.87 and 62.13 areas, roughly around here. That could be a good target. GBP USD. So this one's, yeah, there we go, guys. Look at this. Well, look at this and don't look at it. Yeah, because basically we broke the 1.20 territory, and I said that, hey, if we drop below the 1.20 territory, my next target is the 100-day EMA. But if that gets cleared, I'm going to go further south. Well, the 100-day EMA did a fantastic job, provided support, and we have rebounded back up. So what it means that 120 territory is becoming something that, not really worth watching. So we'll get rid of it. I'll stick to this level here, the 1.2126 still, because a nice good break above this barrier could, first of all, would place the pair above all of the EMAs. And yeah, we could go, nicely to the upside potentially. Maybe at least, maybe not as radically as this, maybe, but at least somewhere towards that 1.2444. Now for the downside, I'll take a conservative approach. I'll wait for a drop below the 1.19 zone. If we do fall below it, yes, this would mean that we have fallen below all of the EMAs, and this could open the door towards my 1.1646 level. Euro Aussie, guys, look at this. I mean, this is what I talked about, and I said to you, keep an eye on it, because if it breaks this upside line, it could go lower. My next target would be 1.5445. Still aiming for that, and I'm actually aiming also for the 100-day EMA. Could be a nice, good target, but initially 1.5445. That's my target. But I also said that if we get a hold up near, or we continue to to respect this upside line, a nice rebound here could be possible. Well, yeah, we didn't respect the line and we moved lower. So yeah, at the moment I'm aiming lower, guys. Yes, my next target is 1.5445. Euro CAD. This one's interesting because yesterday we had a decline, a nice good decline here. We tested the 21-day EMA, but we rebounded back up. And look, if you do like to trade this pair, it could present itself with a nice opportunity. If you remember a while ago, before New Year, I was aiming for this whole area here, the 1.4629, 1.4646. In general, I'm still kind of keeping an eye on those, and if we start pushing, let's say, somewhere above yesterday's high, near the 1.4520, then yes, I could start, considering aiming for those levels again. However, a drop below the 1.4340 could attract more sellers, and because at the same time we could fall below the 21-day EMA, this could open the door towards the 1.4233 territory right here, marked by the high of the 10th of March. And finally, EURUSD, guys, there we go. Beautiful move to the downside, tested the lower side of the rising channel here, and the question here is now, can we see a decline? Well, don't forget about DXY. Let's see what this one's going to do. If it's going to start popping higher, well, guess what? EURUSD could fall off the cliff here and break through the lower side of the rising channel. At the moment, we're rebounding, and this is what I kept on saying before, that, hey, you always respect, the pattern until the pattern is broken. So far it's not broken, so it's still, we're still trading within the rising channel, and there is still potential for this one to actually move higher. We could still rebound from the lower side, and which it is doing right now. But for me, for the upside, I would rather wait for a push above the 1.0736, and then I'll go higher. At this point, I am just observing this one. I'm very curious if this is going to fall off the cliff or not. I'll redraw this line here. I'll mark yesterday's low. This is 1.0520 roughly, and as you drop below it, may open the door towards the 200-day EMA, or maybe even the 100-day EMA. But let's wait and see, guys. So I hope you found it useful, guys. Very, very big, massive thank you for joining in and watching this one till the end. Look, I'll just quick mentioning that tomorrow there will be a session. On Friday, there won't be a session. So, and then I will resume on Thursday only. So, yeah. So, if Monday, Tuesday, Wednesday as well, it's gonna be there won't be any videos. But yeah, tune in tomorrow for the kind of my last video this week. Yeah, we'll have a look at some of these instruments, some new ones maybe, see what's moving, and then yeah, and then we'll take it from there basically. But I hope you'll have a fantastic trading day today, guys. Be careful, like I said, today could be an eventful day. Just position yourselves carefully, have your stop losses in place, manage your risk. That's most important, and everything will be fine. So see you later. See you tomorrow, and as always, at 7 o'clock GMT time. Bye-bye.